Hello and welcome to BQ Brahma. I'm Hiral Dadia. Joining us on the show today, we have Gaurav Bissa, Vice President at Incred Equities, to discuss as to what's the kind of market action that we've been witnessing over the last couple of trading sessions on the back of the pressures that we've already seen. Welcome to the show, Gaurav.
Hi, Hiral, thank you.
Overall, my first question coming to you is with regards to the derivative side of it, right? Now, the FIs have actually gone ahead and sold, whereas DIIs have continued to buy. If you see on the index futures, we've seen selling worth almost 3,600 odd crores. Index options, we've seen a whopping 23,000 odd crores. And in the stock futures segment, we've seen a selling worth almost 570 odd crores that has come in. What is the entire setup actually indicating to us right now?
It is quite simple. We have been trading a range of 17,800 on the lower end and 18,200 on the higher end. And once this range was broken, and it was broken very swiftly, and the incremental portions got added, like you talked about 3,600 crores worth of index which is being sold. So that was something people were not expecting that it will break that easily and that ferociously. And once that happened, that is when I think a lot of the banking names that got stuck. A lot of banks had seen strong outperformance, long positions. We witnessed some liquidation of long positions over there, fresh incremental shorts. Because what happens is that the markets were up on very few number of stocks. It was not as if all the stocks were going very strong. And the positions also were built in a way that only limited stocks enjoyed strong OI, strong rollovers. And once that got into view of traders, I think it's quite logical. The idea they will book profit, so people will try to create some crack in the name so that we can have some sort of arbitrage. If something has fallen 10% and the other one is only down by 1% and the markets are looking weak, why not take a bet? So this is something that has happened in the market, whether in terms of Nifty index future OI or you can talk about the banking OI.
Right. So overall, let's quickly first talk about Nifty. Clearly, we've seen addition in terms of open interest at levels of 17,300, 17,200, 17,100, and 17,000 strike puts, whereas 17,500, 17,600, 17,700, and 17,800 strike calls have seen good amount of open interest addition. Now, taking these numbers into consideration, what is it indicating from a market perspective?
Data points the same thing. We had a very high OI concentration, 18,000 strike call option. It switched to 17,800, and now, as you mentioned, the other strikes are also seeing a good amount of writing happening. And what happens is when there's a very sharp fall happening, your put OI tends to see a very explosive rise in IVs. So people might want to play with IV arbitrage as well. You might sell a strike, you cover a strike little higher. If there's some stability coming in, we may see some volatility arbitrage come into the picture. So that might also be the case. But as long as we don't go and close above levels of 17,800, it will be a sell-on-rise market for now. Nifty is trading near the crucial support area of 7,500. If it were to close below 7,500 on spot side, then it may slip towards the level of 17,200, 17,300 in a very short span of time.
Right. And with this, clearly, are we getting an indication that probably market is likely to remain under selling at least in the near term before we really see some bit of a pull-up happening?
Yes, for Nifty to go up, there has to be some sectors or some sort of stocks that will have to outperform. And as I said, that the current culprit are banking names. If you look at today's trading session as well, you'll see significant underperformance in Bank Nifty and banking stocks especially. So till then, this does not get over with. I don't see a very sharp uprise. We may see a technical bounce back of 100 points and 50 points, as I said. But till the time we are not closing above 7,800, the call writers of strikes between 17,800 to 18,000, they will not see panic. They will not see a reason to cover their positions. Until then, that does not happen. I think there's going to be comfortable selling at out of the money call options, and we may, if not fall much, we may still stick in the range of 17,500 to 17,700.
Right. And to add to this, as you mentioned about Bank Nifty as well, now clearly a correction of almost around 1,700 points is what we've seen in the last 2 to 3 trading sessions, right? However, overall, 40,500 call strike is holding noteworthy open interest of almost 9 lakh shares, whereas if you see the put option at 40,500 strike is holding an open interest of, similar open interest as well. Now, taking that into consideration, do we expect to see healthy call writing at 41,000 levels? And if yes, can that act as a substantial resistance level?
Well, it is a critical resistance area, 41,000, not just because it's a psychological mark, but we had seen a failed attempt to cross these levels and we went lower. Today, also, if you see over here, we made in futures, we made around levels of 40,700 and then we slipped lower. So, this is going to be a critical support area as well. And the fact that it has the highest concentration, but that's going to be for next 2 or 3 days. So, yes, it is going to be a very critical area till the time 41,000 is not conquered on a closing basis. I don't expect a very strong short covering coming in by Nifty as well. As I said that if you look at the small time frame, shorter time frames, we will see a lot of divergences there being oversold. So we may see a technical bounce back, whether it happens from the current juncture or towards 40,000 in futures levels. That's a different part. But if you're talking about structural uptrend, then even in the start, it will have to be a close above 41,000. Till then, there might be technical bounce backs, but not beyond that.
Right. And overall, from a rollover perspective as well, if you go to see, we've actually started, Gaurav, the new series as well with almost a 6-month low open interest. And this is coming in way ahead of the crucial events. You have the budget, which is lined up. You have the Fed meeting, which is lined up as well. And if you see in terms of Nifty near month premium, that has remained on the higher side, right? And the VIX is around 17%. Now, from current levels, do you think all of this actually needs to subside significantly, and only post the events we may see some bit of a decline that could come in?
See, this is an important event, and after that, I think the same day or next day we have Fed policy, US Fed policy as well. So there's going to be multiple events ahead. That might be one of the reason why we might have seen slightly lesser over. Couple that with the Fed from around 19,000 levels, we have already seen correction of 1,000 points when the expiry was there. So there is good amount of downside that's already been seen. That is one of the reasons why some people might have not carried their short positions. And what generally happens is that if you take away the event, we can see some more additions. So if you leave the rollover data aside, after that, after the rollovers in last couple of trading sessions, we have added short positions again. So the point is that the positions that were not carried over in the series, people are starting to build those positions now. Right? So I mean that has negated the fact that we are starting with the lower rollovers. And if the event turns out to be not a major draw for the markets, the downtrend may still continue.
Right. And from a stock specific perspective, let's pick up a couple of counters which actually saw a high amount of open interest. Specifically, you had a SBI which added almost 20 percent in terms of open interest till Friday. How would you actually view an SBI taking into consideration the open interest addition that we've already started to see?
SBI was one of the stable banking names, or rather, I would put it stable large banking names. And now we've seen a very strong correction happening. So yes, there has been over addition happened, but the breakdown started from a level of 595, 600. It's already corrected 10% from here. So there can be some more downside. It may slip towards level of 510. But if you ask me whether one should be shorting SBI at the current juncture, I would say no, because it's already fallen a lot. A small positive in the market can push it to levels of 560, 565. So our stoppers can get triggered and then again it may resume downtrend. So in my opinion, it can slip some more. It is looking weak on charts as well. The data is also showing that it's quite weak at this stage, but I would not recommend fresh shorting at this stage.
Right. Similarly, with an HDFC Bank as well, if you see the open interest range around 12%, whereas there is some bit of short buildup that's happening on an HDFC Bank as well. What is the view that you form on that one?
See, for HDFC Bank, there was a very clear, strong resistance at area of 1700. This is the third attempt it made around 1700. It has made a failed attempt. But if you look on a very short-term data, short-term charts, it's stuck in the range. You may see a lot of fighting happening at levels of 1500 put option on the higher end, 1700 call option would see lighting. the stock is stuck in the range, and I think it's going to continue doing that. We may see a slippage of 2%, 3%, but overall, for next couple of weeks at least, the range is going to be between 1,500 on the lower end, 1,700 on the higher end.
Hmm. Right. With regards to an ICICI Bank as well, we've seen an 8% open interest addition till Friday. Now, what is that indicating overall from a derivative perspective and seeing the way the deliveries and the stock price performances in the cash market?
ICICI Bank was the reason why we witnessed such a strong outperformance in Bank Nifty in last 3 4 months. HDFC Bank was stuck in the range, but ICICI Bank and Axis Bank, these two banks were the reason why we witnessed such strong outperformance, and especially ICICI Bank. The current juncture again, we may see a technical bounce back sort of, because as we said that there's some positions that have been created. If there's a small spike coming in, some part of that can see covering, but overall structure still remains negative. If you look at the option chain as well, you will see that 840, 860 call options are seeing comfortable writing happening. So as long as it's not giving a close above 840, till the time we don't see penny covering in call writers, I don't think we should be looking for a bottoming or process. Once the stock price is credit a lot, and you are seeing negative data as well, how do we identify where the short covering might start? So the first can be if there's a very high OI in some particular strike call option. If that witnesses short covering, that can start the spiral effect of short covering across the strikes as well as the open interest in futures as well.
Right. And overall, from an Adani Group stocks perspective, specifically Adani Enterprises, as well as if you see an Adani Ports, a 7% open interest addition is what we've seen in terms of Friday. Again, the kind of fall that we saw on the cash market of the last two trading sessions and the recovery which has come in today's session, which is obviously marginal. What would what's the derivative number actually showing us?
See, for me, the previous day or the Friday's close is going to be important. That was the day when the most OI additions were seen. When we speak about 7%, the most portions were seen being added on that particular day. So if that low is taken out, and if you see incremental shorts right now, you might see some additional shorts as well. But settled data is going to be more important. Intraday data might be misleading. So if you see more incremental short positions getting built, then yes, we may see more pressure. But if we are seeing only 2%, 3% OI addition happening, and we are not reaching the previous low as well, then I don't think there's going to be too much of reason to panic about. But if we are seeing another 10%, 15% OI today, and if we are breaking, and if we are going below Friday's low, I think that is something that one needs to be careful about. Then we see intense pressure in Adani stocks again. But for now, that doesn't look to be happening this point in time. So I would not preempt that, neither covering nor falling more, but I would rather wait for data to unfold.
Right. So one question I want to understand from you, Gaurav, is if you see the market-wide position limit specifically for Adani Ports, now that is, the open interest against the market-wide position is around 70% as per the previous close data. Similarly, for Adani Enterprises, it's around 50%. So what would that actually mean for the stock and the market?
It basically means that there's still room for fresh additions that can be created, and we are seeing that the intraday move as well. We have seen since morning it has been going down. We witnessed a sharp rise in the early hours of trading session, but that was short-lived, and we have seen some unwinding again happening. So this basically, if it's still well below the market-wide position limit, it basically means that, or it implies that there can be some more shorts that can get created. And if that happens, actually, we may see some more pressure building up. So if you look at the kind of data it is showing right now, and if you look at hour by hour data, we are seeing some incremental shorts again, right? So intuitively, there is some shorts that are again getting built in the system, but it's not very aggressive at this point in time. As I said, at the end of the day, once we have a settled data, it will give a better color to the picture, and then we can have a better idea that how things are panning out. But as long as we don't reach the previous day low, I think the current data is not something to get panicked about right away.
Right. And overall, specifically with regards to Reliance Industries as well, again, another heavyweight active right now in terms of the F&O side of it as well. A 4% open interest addition is what we've seen on Friday. What are the moves indicating today?
See, but today, it's just more of a lackluster move. It's neither up nor down. Some amount of green color to it. But right now, it's at the support area. So if again you look at the option data, if somebody looks at option data for a while, one will realize that there has been comfortable writing happening in 2,200, 2,300 put options over a period of time. And the stock has been in the range of 2,300 on the lower end and on the higher end, 2,700, 2,800. So it's stuck in the range. It's near the lower end of the support area. If we don't see incremental shorts getting built, we may see a bounce back sort of coming in. So there has been more of a price correction that has happened in Reliance. But if you look at the OI positions, OI additions, it has not been very significant. Had there been 15%, 20%, then it would have been something serious about. But less than 5, less than 7%, I don't think something we panic about right away because price has moved more compared to open interest.
Right. And overall, clearly from any other stock perspective as well, any counters that we should be watching out for that are seeing a good long build-up coming in at current levels?
I would not talk about long build-ups, but Maruti witnessed amount of short covering, so that is something that one can keep on radar. And for longs also, till the time we don't see 2 or 3 continuous day of long positions, I don't think it is the market that one should take a bet looking at data of just one day. So if there's a consistent long positions getting added, then probably yes, Bharti Airtel is another name. We witness some of the short covering happening. So that can also be on the radar. But right now, we're just having, at intent, we are looking for a wait and watch. Till then, we don't see some strong data. I don't think it's time to be jumping the market right away.
Right. And would it be right to say that traders are actually using every opportunity with a sell on rise strategy?
That is what is being visible right now. There's no rise as such,
Right.
consistently falling. So any breach of critical support area, we are witnessing selling pressure. So if we are sustaining below 7,500 on the spot side, you are again, people will get more active or rather it will become hyperactive and we can see more pressure building up. We can have a repeat of Friday. So it's going to be very difficult to play for the long side. As I said, you can play for a bounce back, a technical bounce back or data pointing a bounce back. But beyond bounce back, don't look for major upside that this is going to be a reversal, this is going to be a bottom out process. I think it's too premature to talk about the bottom out or reversal at this stage. But yes, people will keep buying and selling for 70, 80 points scalp interest. That can be done. But overall, the trend is remaining, is looking weak. The data is also not showing very strong upside. So be on the trend which is weak at this point in time. Don't go for aggressive long position right away.
Right. So overall, that's the view coming in overall from a derivative perspective as to what one should be doing in terms of markets. Thank you, Gaurav, so much for joining us on the show and giving us those inputs. Thank you. Stay safe and speak to you soon again.
Thank you.